debt ceiling showdown continues. Here's what you need to know before the bell. With only a few days left this month where all members of Congress and the president are in town simultaneously to get the debt ceiling deal resolved, tomorrow the next set of meetings is scheduled to discuss the debt ceiling and getting it resolved. And we're going to have to see what that does. This morning, futures are up a little bit on hopes that this debt ceiling resolution will come sooner than later. We can put all this behind us, get the bonds issued, get our spending taken care of. Of course, the big threat coming out from the media is that, oh my gosh, if we don't, well, then that's going to lead to Social Security payments not getting made. No, actually not, because in 1994-95, a bill was passed that says Social Security gets paid, period. So don't worry about that. That will get done. But again, the big concern, of course, is the default on the debt. That won't happen either. We'll always make our interest payments. Other stuff will get cut, though. We will see a government shutdown. We would, of course, see people laid off. Nobody wants that either in Washington. So I would expect that we'll see some type of give and take over the next few days to get a debt ceiling deal done and that limit raised. New bonds issued, of course, that will very likely spike up interest rates in the short term. Give the markets a bit of relief here, though. Would not be surprising to see this market move up rather sharply on a debt ceiling deal. The market has been, of course, trading sideways now for the last 45 days. We've gone literally nowhere in 45 days as markets continue to trade above the 50-day moving average, but within a very tight trading range now. Again, during that entire period, not making any real advance whatsoever. We've been on a sell signal now for the last really 20 days or so. That's getting fairly extended as well. So as we continue to work through this cycle, the market is building itself up on a base of support for a move higher. So a resolution of the debt ceiling, of course, should lift asset prices, break us out of this trading range, and potentially set us up for a move back to around 4,200. Would be a first guess as to where the markets would rise to. After that, though, we're going to be back to economic data, earnings flows, those type of things. Earnings expectations are improving now because we saw earnings come in better than expected in quarter 4 and quarter 1. We're now starting to see quarter 2 estimates being lifted, as well as the rest of the year and into fiscal year 2024. Those estimates rising back to where they were in January of 2022. So lots of expectations here. The economy is going to start picking up steam and starting to get a little bit more robust as we get into the latter half of this year. Again, as we've now been in this kind of economic malaise now for 18 months, we're also getting into the very long end of that kind of economic recessionary cycle to start seeing that troughing in economic expectations and an improvement there as well. So again, markets are trying to look forward here to a more optimistic outlook. We'll see, but the first thing we've got to get through is through this debt ceiling, get that debt ceiling resolved, and then we can focus back on the earnings and economic data. Again, the markets are going to open positively this morning, but we'll see where we end today, which will be a good predictor of what markets are expecting from the debt ceiling debate. I'm your host, Lance Roberts, and this is what you need to know before the bell.